Every year, millions of Americans over 65 keep paying a bill the government has already excused them from, not because they were turned down, because nobody ever told them to ask. Let me be precise, because most of the internet is not. None of these stop automatically on your 65th birthday. Everyone requires you to file something, and one does not depend on your age at all. That is why they sit, unclaimed, 5 bills and where the form lives. The first is your property tax. Nearly every state gives homeowners over 65 one of 3 things: an exemption, a freeze, or a deferral. The names change from state to state. The machinery does not, and knowing which you have is the whole game. An exemption cuts the value your home is taxed on. In Texas, for 2026, school districts exempt $140,000 of a homestead's value, and $60,000 more at 65. That is $200,000 they cannot tax. A home appraised at $350,000 is taxed on $150,000. File the residence homestead application with your county appraisal district before the 1st of May. A freeze does not lower your bill, it stops it climbing. New Jersey's senior freeze reimburses the difference between this year's taxes and your base year. Base year $6,000, this year $8,000. The state sends back $2,000. You must be 65 or older and have owned the home since the end of 2022. It is Form PAS1. A deferral is the most misunderstood. Texas lets a homeowner 65 or older stop paying property tax on a homestead entirely. But deferred is not forgiven. Interest accrues, and the whole amount comes due when the home is sold or the estate settled. If staying put is the priority, it is a lifeline. But you are leaving your children the bill. And Florida goes furthest. In counties that adopted it, a homeowner 65 or older pays nothing at all on the assessed value. You have to be under the income limit in a home under $250,000, and you have to have lived in it 25 years. The second bill is your Medicare Part B premium. For 2026, $202.90 a month. Just over $2,434 a year, taken out of your Social Security payment before you ever see it. The Medicare savings programs can make that zero. The Qualified Medicare Beneficiary Program, QMB, pays your Part B premium. It also pays your Part A and Part B deductibles, your coinsurance, and your co-payments. For 2026, in most states, the monthly income limit is $1,350 for an individual, $1,824 for a couple. Before you count yourself out, some states set higher limits, some have no asset test at all, and Medicare's own guidance is to apply even if you are certain you earn too much. QMB also carries a protection nobody talks about. Federal law forbids any Medicare provider from billing you for Part A or Part B cost sharing, even one who does not accept Medicaid. If you're in QMB and a bill arrives, that bill is not lawful. 2 more sit above it: the Specified Low-Income Medicare Beneficiary Program, SLMB, and the Qualifying Individual Program, QI. Both pay the Part B premium only, up to $1,816 a month, and enrolling in any of the 3 automatically qualifies you for extra help with Part D, with no separate application. It covers your drug plan premium, cuts the deductible, and caps copays. Apply through your state Medicaid office. The third bill is your federal income tax. For 2026, the standard deduction is $16,100 single, $32,200 married filing jointly. At 65, you get more, $1,650 per person for married filers, $2,050 if you are single and not a surviving spouse, and there is a new one for tax years 2025 through 2028. A person 65 or older can deduct a further $6,000, $12,000 where both spouses qualify. It goes on Schedule 1A, and you can take it whether you itemize or not. Add it up. A married couple, both 65, filing jointly for 2026, $32,200 plus $1,650 each plus $6,000 each, $47,500 of income before $1 of federal tax is owed. A single filer 65 or older, $16,100 plus $2,050 plus $6,000, $24,150. That $6,000 starts shrinking above $75,000 of modified adjusted gross income or $150,000 joint. Now, the correction, because this is widely misreported, this deduction did not end the taxation of Social Security. Benefits still become taxable on combined income, which is your adjusted gross income plus tax-exempt interest plus half your benefits. Above $25,000 single or $32,000 joint, up to half can be taxed. Above $34,000 or $44,000, up to 85%. It lowers tax on your total income. It does not touch that calculation. The fourth is what it costs to keep the lights on and the phone working. Neither of these is labeled a senior program, which is exactly why people over 65 never look at them. LIHEAP, the Low Income Home Energy Assistance Program, helps pay heating and cooling and can cover an energy crisis. Your state runs it, and federal rules direct that priority go to elderly households. The Weatherization Assistance Program is the one most people leave on the table. It is contractors coming to your home at no cost to insulate, seal, and repair. 200% of the poverty guidelines qualifies you, and SSI qualifies automatically. The Department of Energy puts the average saving at $372 a year. And the work stays in the house. Then Lifeline, $9.25 a month off phone, internet or a bundle, $34.25 on tribal lands. You qualify at 135% of the poverty guidelines or through Medicaid or SSI. Fifth, state income tax on retirement income, where the answer genuinely depends on where you live. Some states do not tax it at all. Others exclude a fixed amount that rises with age. Georgia excludes $35,000 at ages 62 to 64, $65,000 at 65 and older per person. Both spouses qualifying means $130,000. Notice those ages, these step up in tiers, so if you qualified at 62 and never looked again, you may be sitting on the 65 figure right now. So do one thing after this video. Call your county assessor and ask which senior exemptions you are currently receiving. Not which ones exist, which ones you are getting. 10 minutes, and it is the most common place this money is left behind. Thank you for watching all the way to the end. If this video gave you something to think about, do one small thing. Subscribe to Retirement Decisions Desk. Every video here unpacks one retirement decision, and subscribing is how you'll never miss the next one. Take care of yourself, and I will see you in the next video.